You can hire a bookkeeper, a tax pro, even a CFO, but that doesn't mean you're off the hook as business owner. If you're the owner, your finances are still your responsibility. In this episode, we're breaking down what parts of your accounting you can delegate, what you can't, and what you absolutely need to understand if you want your business to grow, or even if you're just aiming to survive.
Welcome, and we're excited to have you today. In this episode, with Seanna and we are talking about something pretty prevalent in which you look to outsource something and your hope is that you never have to touch it again. I mean, I've been guilty of this for podcast editing or whatever the case may be. Like, I want to outsource it and be done. And with bookkeepers, we see the same thing, and tax pros. But at the end of the day, we're still the business owners. Like, we're still in charge of the podcast and you're still in charge of your book. So we're going to talk about that.
Yes, I am excited about this. I have had a lot of espresso today and I'm feeling a little bit fired up. So if this feels like a kick in the butt or a little bit of harsh reality, well, that's why we titled this podcast Unfiltered Profit. Like, we're not trying to sugarcoat things. We're not trying to always be feel good, even though we want to be motivational and inspiring along the way. We want you to run a successful business that provides for your family. And sometimes that means we have to bring the harsh truth to your ears.
Yes, I think that's right. So the biggest thing, right? We get hired as CPAs and accountants as the experts. And I think at that point, the clients want to check out of the numbers. They believe that that's it. That's all they have to do. They've hired a quality bookkeeper. They've done the interviews and they're done. But that's not the reality, right?
No. And I think the best phrase for this is, in business, we can delegate, but we cannot abdicate. We are not giving up a responsibility, oversight, any of those things. But it's easy to get into that mindset of someone else has got it. And we have to remind ourselves that it is delegation we're doing. We're trying to make our lives easier. We are still responsible. The buck still stops with us.
It really does. What I hear a lot is that I want a proactive accountant, a proactive bookkeeper. And we've used these terms in our past episodes that we do find that we're proactive. What are the roles? What are the roles as a bookkeeper and what are the roles as a business owner, and how at least we've defined it as our firm and how we've both seen it in the past?
Yeah. So from our standpoint, we're proactive because we're staying on top of the books. You're not logging in and your books are 2 months behind and you need a financial statement tomorrow and it's nowhere close to being ready. So now you can't make a decision. You don't know where your cash is at, none of that stuff, right? We have the financials up to date. We are looking at your tax position throughout the year. We're pulling your financial statements. We're warning you what type of tax payment you need to make on a quarterly basis, all that sort of stuff.
Mhm.
That's proactive. As a business owner, you have to be proactive by actually logging in and looking at your books. Or if you don't, we send you the reports.
Yeah.
You don't even have to log in. There's no logging in to be done. Open the email, read the email with the words in it, pull the report up, look at the report. And we don't have any way of tracking how many people actually open up an attachment in their email. But if you're reading this and you're feeling a little, or reading this, listening to this, and you're feeling a little guilty, open that report up, right? Click the link, look through it. But that also means that you have some education in understanding what you're looking at. And yes, we're going to break that down for you some, but you still have to know what that means for your business. Right.
Yeah. Okay. So let's say you're the business owner who does look at it and you find an error. Something's classified incorrectly or something might be missing, accounts receivable, accounts payable, maybe a bill's missing or some money due to you. Is that bad bookkeeping? Is it bad communication? Where does that land? Or is this just part of the process? And I would personally define it as part of the process, is that you're the final review as the business owner.
Yeah. And, I think you look at it from a couple of ways. First, we're all human. And even if a computer is doing your bookkeeping, you still have to look over the finances and there are probably going to be categorization mistakes or whatever. So we're all human. Even computers make the mistake. We're not computers. So of course, there's occasionally going to be a mistake. We're just not perfect. And if you call us out on it, we're going to apologize, right? Because we want to be perfect, but we're human. Second, you have to look at what the communication process has been. Is your bookkeeper asking for documentation and you're not providing it? Are they asking you uncategorized transaction questions and you're not responding? We all get busy. The bookkeeping takes the back burner. There are all sorts of things and there's tons of grace to be extended in all different directions. But we have to look at that communication process. And I think something that gets forgotten is that no contractor that works for you is a mind reader. We as accountants can't be mind readers and say, like, well, they have this invoice outstanding that we've never been told about. How would we possibly know if it's not in the documentation you've sent our direction? There's been no communication about it. We're never going to know.
Right? We can't. We are not full-time in your business. And I think that's a
Right.
huge differentiation. Like to hire a full-time bookkeeper, to hire a full-time accountant, you're talking a $60,000, $70,000 starting salary plus benefits plus taxes. The idea is that you're hiring out something that needs done for a fraction of that cost. And with that, there are give and takes. We cannot be fully in your business. We cannot know every detail. Coming from corporate who had accounting departments, you had individuals who did nothing but, let's say, read the contracts and record those journal entries. Like that was their sole job. So yeah, anything related to that contract was of course caught and of course taken care of because we had somebody who did that. Whereas we are working off of kind of what you're doing a few days after you've done it, once it hits the bank account and stuff
Yep.
like that. But you haven't hired necessarily everyone to come in and read your contracts and look at all of your bills and taking care of all that because you can't afford it. At the level of your business, you're not at the place to afford a full-time bookkeeper.
And I'm just going to go ahead because then I think the next logical thing, if someone is sitting here and they're like, well, if my bookkeeper can't know that stuff, then I need a role in house. I'll just pass that responsibility
Mhm.
off to my admin, my project manager, my insert whatever position you like that they're like, well, I already needed that anyway. And that role's not really going to be full time. So I'll give them my bookkeeping too. That could work. If you're a very simple company, I had a conversation today with someone about us doing their taxes. And I was like, yes, your business is small. You're logging into QuickBooks. You're handling your transactions. There's not much going on. I understand not hiring a bookkeeper.
Yeah.
I wouldn't pay for it either. You're on top of it. And you don't have anything complex. You don't have invoicing. You don't have all these other pieces. Sure. And so if you're a very, very simple, yeah, maybe, and I say that lightly, maybe a different position could handle the bookkeeping and do it well and you not end up with a mess. That would probably be what, 3% of the time that actually works. I mean, it's some very small percentage because I know the books that we've seen and had to clean up after such situations.
Mhm.
And that's even if you're like, okay, well, I'm going to hire this person that's willing to take a part-time bookkeeping role. And they used to do the books for the automotive place in town here. No. But it's
Yay.
like anybody can call themselves a bookkeeper.
They
That
can.
doesn't mean they actually know accounting. You don't have to understand debits and credits and financial statements and all of that in order to be able to call yourself a bookkeeper. There's no like rules on calling yourself a bookkeeper.
Mm-mm.
You just have to be careful when you think you're going to pass that role off, to anybody, but don't sit there and be like, well, if there are going to be mistakes, if I hire a bookkeeping firm because I don't, they're not in my business and I don't share that information, there's going to be mistakes in house too. Trust me.
There are, and you're still going to have to review it. If it's in-house, you still need to review it.
Yes.
And I don't know about you, but in all of the fraud cases I hear, it's more often that in-house person who was in charge of the invoicing and the bill paying and the cash management that magically stole $30,000 through creating new vendors. It's not as often it's the outside hire that did it. Because again, we don't have all of the insight and all of the control, and that's a whole other episode about internal controls, but that is something to keep in mind that there are
Yes.
pieces you could for sure hand off, but all of it, you want to be questioning whether to do that. So we just can't see all, we can't do all. And that's also okay. It keeps things
Yep.
separate. It keeps your business safer. And I think it's just extending that grace of like, hey, things happen and they're easy fixes for qualified accountants like ourselves and qualified bookkeepers like ourselves. Like it's nothing off our backs to go and
Yeah.
reclass something, even if it's simply that you as the business owner want to see it somewhere else. Not that
Yep.
it's materially incorrect, but that you're like, oh, I'd rather it be here. Just let us know. We're happy to move it. We have no personal tie to where we put it. It was our best effort to present the information to you. And if it's not working for you or in your brain, just speak up and say something.
Yep. And the more we know about your processes, the more we can offer good suggestions for how you look at the financial statements. Or, we had a client that he's like, well, this is how I do my invoicing. I'm like, well, that's really not the best way to do it for us to be able to see your financial statements, know how your business is performing. Like, this is how you should handle your progress invoicing or, whatever along the way. If we know the process, we can help with the process. We can offer insights. And then in that, we can say, oh, yeah, and send us those documents as you create them, because then we'll get them in the books. And then we won't end up in this place where you're reviewing your monthly financial statement and you're like, well, that's not correct.
Yeah. So you hire a bookkeeper. How long is reasonable for them to get the feel and the flow of your business and to kind of whittle down both like past errors that maybe were existing and to kind of get to the point where there's just fewer errors going forward?
I would say for the initial feel and to even start to be in a flow, it's probably going to take 3 months?
Yeah, maybe
I mean,
longer.
you've got to get through a couple of closes for that to happen. And it's all based on your complexity, how big you are, like what your accounts receivable, accounts payable looks like, loans, all of those different pieces that play into it. So that can certainly add to that timeline, depending on how on top of it you are giving information, sharing the insights so that we as the accountants can learn. But maybe a smaller, not very complex client, yeah, within about a month, we can feel pretty up to speed. If you're like, but that's very small and very simple. I would say it takes several months to feel like we understand the business. And then if you want to say, how many months does it take for us to understand your financials so well that we can go back and point out things like, oh, that might not have been done right on the tax return, or this is a little bit messy, or whatever. Gosh, I mean, we could do that through the whole first year of your client engagement. I know that that sounds like a long time, but there are just certain pieces that it's like, well, we only see this part come up on a quarterly basis. Well,
Mhm.
okay, well, if it takes several touch points for us to kind of like start to ask those questions, okay, well, let's see what the next one looks like, those types of things. It's only 4 touch points over 1 year where we might be looking back at something and saying like, oh, that might need to get caught up. It just takes a while if you're complex, if you have some things that are only happening periodically, and it might feel frustrating as the client. I can promise you it feels frustrating as the accountant too,
Yeah.
because again, we want to do a good job. Like, we're
Mhm.
not sitting here not wanting to do a good job for you and just take your money. That's not the way we work. That's not the way our company rolls, or most companies, right? Like, I don't think anyone sets out to like, let me do a horrible job, other than, there are Ponzi schemes and all kinds of like,
Right.
there
Right,
are
right.
people, but the majority of people want to do a good job.
They do, and also I think part of that, I agree to the year, and then there's a lot that was done that we had no control over. So unless you're a brand new business and we got you from the get-go and we got to create the systems ourselves or whatever accountant you pick,
Yep.
we're stepping into stuff other people did that we can't necessarily undo.
Yeah.
People electing you into S corps when you shouldn't have been, or accrual method instead of cash when cash really made sense. Like, these are the pieces that like we can't control, and that can create complexities, and it can
Yep.
create a mess that maybe we didn't see and your other accountant didn't see. Like, there's just some of that that has to be undone. And the more frequently you move your business to other accountants, the more likely something has gone off the rails, and it's just going to take time to fix it and find it. But I think the important part to remember is all of this is generally fixable, because we're not talking about publicly traded, audited companies. Worst case, it affected your taxes and we need to go amend your tax return. Like, that's
Yep.
really what most of this is going to boil down to. And so I think approaching that with a different level of stress is important to remember that, like, it's not a 10 out of 10 every time. It's, hey, this doesn't look right. Can we fix it? Or I think this got missed. Can we look back and see what's going on? And a competent qualified person will be like, yeah, one, let's look at it. Two, let's make sure we fully understand what's going on. Three, if to fix it, these are your options and these are the outcomes of those options. So as the owner, understanding that, and I think approaching the situation with the right level of stress would be important.
Yes. Not every little thing is don't make a mountain out of a molehill,
Yeah.
for sure.
And not to be cavalier, we know your books are important. We know making
Yeah.
decisions off of it. It's just that these things can be fixed. And I think it's one of the reasons I like this line of business. I never wanted to be in like a life and death situation. I like something where we can learn and grow and change and go back and fix it, whether it was us or somebody else. Like, hey, it's okay. We can do that.
Yeah. Yeah. And I think for the most part, most clients just want us to hear, it's going to be okay. This isn't that big of a deal, right?
Yeah.
You get an IRS notice and you're like, they're going to come knocking at my door tomorrow. And it's like, this is literally just asking you to file a form. We're going to file the form. It's all going to be okay.
It is. So as business owners, what do you need to be looking at monthly when you get those reports from your bookkeepers, other than just opening the file?
First step, open file. I would like for you to be looking at your margins, right? I would like for you to understand what your margin actually is. Like, how much profit did you make in the month? Was that on par with what your industry should be expecting? We're doing a series on different industries and talking about margins. And so, don't compare yourself to a different industry at all, but think about where you're falling within that scope of your industry and what you should expect from that standpoint. And be just cognizant of the big expenses on the financial statement. Do those make sense? Are they where they should be? Or maybe it doesn't make sense that you have $2,000 to office expenses last month. I didn't have anything there. Maybe ask the question, like, what got categorized there that maybe is in the wrong spot? Or does your income look like it matches with what you collected or billed out, depending on what your financial statements look like? Like, we're talking about how to review this from the standpoint of like an accountant has handed you financials.
Mm-hmm.
How do you know that like we didn't make a mistake? Your
Yeah.
accountant didn't make a mistake. Well, you generally know how much you had in revenue, I would hope. You kind of have a pulse on your business of what's going on. Does that make sense? We don't have to be down to the penny. Like, does that make sense for all of these different categories? Review that and then like look at the balance sheet.
Yeah.
Understand what a balance sheet is and where there should be negatives and where there shouldn't be negatives. Make sure there's no negatives where they shouldn't be. I know that like it sounds really rudimentary, but it is kind of. And if you have accounts receivable, does that make sense? Hopefully, if we're the ones recording accounts receivable, that means that you're sending invoices out of somewhere else that we don't have access to. So you should have some other check on where this stuff sits or how much you have in outstanding invoices to clients. I hope you have that somewhere, a spreadsheet, whatever that
Yeah.
looks like for you that we're entering on our side. Just a general review of the pulse of your business, right? That's what the financial statements are. They're kind of like a little check-in point.
They are. And if nothing else, again, I hate to like belabor the point, but it is for fraud. Like the business owners that are losing the money that sit there and say, oh my gosh, somebody stole so much money from me. It's because they abdicated all responsibility for their financial statements. And I'd love to say everyone is great and no one will ever do that. But I mean, there's a whole podcast I listen to that is nothing but fraud. And it's all on the small business government side. It's not on the Bernie Madoff side. So
Yeah. And
just get engaged.
I think we both have had instances where we personally know small businesses or we personally know of small businesses that had fraud
Mhm.
happen to them. And so I like in saying that, it's like, oh, well, that was a podcast that Caitlynn listened to. No, like this literally happens
Yeah.
to businesses all the time in your town, everywhere. You just might not hear about it because it might not be big enough to make the local paper, but it does happen. And you've got to be careful in your own company unless you just are operating you by yourself.
Without a doubt. I mean, honestly, one of the private schools we sent our kids to, when we left, we found out the bookkeeper had been embezzling. Like, it's so easy to do. It is so easy to do if if the people in charge are not paying attention. And the biggest businesses, the CFO still reports to the CEO, and that CEO is still the final person to sign, to approve, to say it's okay. Anything else we want owners to know with regard to like what their role is and our role is and how we can help?
I think the biggest thing is just that as a business owner, you have to get a certain level of education yourself, right? Like we don't go into business saying like, oh, I know how to run business, so that's why I'm going into business. Most of us are technicians that are good at something, whether you're a plumber, an architect, or a creative, or whatever that looks like for you. You are good at something and you say, I want to step out on my own and have a business doing this. In no part of what I just said does it say you're good at running a business. Does it
Right.
say that you understand the financials? All these different pieces, and you're going to have different challenges at different stages of your business. And you have to, as the business owner, want to run a business. As we talked about in the solopreneur versus scaling episode, it's okay to want to just stay by yourself, basically stay the technician and run your business that way. But you have to understand like where you're falling in that spectrum and that you really are a technician and that you still have to understand the financials, but financials aren't going to get super complex if you don't grow but so much. But if you start adding contractors in and other pieces, they might, you still have to understand all the basics to business. If you don't understand them, you're like, I don't even know what a P&L is. I don't even know what a balance sheet is. Go get that education but like have a conversation with a CPA. Just try to get some understanding somewhere.
Yep. And your team can help. And we are always happy to help if you're a client of ours and you're like, I thought I knew. And that was one of the things that I think Sean and I just love about what we do is that it's okay if you've been faking it this whole time and you're like, oh, it's been 5 years. I actually want to know what this means. Like, just ask. We're happy to tell you. Our team is happy to tell you. There's no judgment here. I mean, Sean and I are learning every day how to run a business together that's growing and scaling. And it's just being humble enough to ask the question and just having the people who will answer with no judgment. And that would be folks like us. There's plenty out there. I know there are some who are not as nice and they don't need your business. So you can find the ones who want to help. So we hope this helped today. We encourage you to go and make sure that you download all future podcasts, but follow us over on Instagram, send us a message, visit our website if you need a new bookkeeper who will help educate you. We'd be happy to do that. Thank you all for listening.